Earnings season kicks off. The Fed says no inflation. And what a masters we got going on today. What's up, everybody? Welcome aboard to Bubba's Bottom Line. It is Sunday, April the 14th, tax day tomorrow. Make sure you get those dollars in. With this lack of inflationary environment, those dollars aren't worth very much, at least according to the geniuses at the Federal Reserve. And of course, we have the continuing argument of there is no inflation, and of course, only because they continue to take out, or it's called X food and energy. Now, since energy is up about 60% this year, or 40, whatever it is, 40% this year, and food is going higher, yet when our farmers go to plant and they go to do things, their input costs are higher and their output is lower. So what a mess we have, what a mess has been created by those wonderful friends of ours at the Federal Reserve who continue to butcher and really basically the base Robin Hood effect. Of course, they're stealing from the middle class and continuing to push it upwards. It is really just a joke. And of course, we continue to see the Fed trying to be politicized, which again, if you really look at the Federal Reserve, it is a politicized organization, because who appoints the people to the Fed? The current president. So in this case, it is Donald Trump. Now, this is not the first president that has battled with the Fed and doesn't like the way they do things. And of course, many of us out there, especially those in the middle, many of us libertarians, don't like the Fed, period, and believe that we should allow the free market system to actually work instead of letting some academia person, okay, who has no idea what it's like in the real world, make a decision on what interest rates may be. So again, they are 100% wrong. They are 100% wrong about talking about whether or not there will be a recession soon. I would say that we are starting the recession already, in my opinion. Now, again, there are too many warning signs out there to worry about, but of course, what's to worry? The stock market is on its way to record highs. And of course, we'll talk about that in a little bit, but of course, the markets do go up because we started earnings season on Friday. And of course, we had the banks report, and JP Morgan was up about, 4 or 5% for the day. And of course, they knocked the cover off the ball. But again, if you want to get a good comparison, it's like taking Mike Trout, the greatest baseball player of this generation, possibly the greatest player of all time, and putting him in a Little League park to hit, okay? So when you continue to reduce what the expectations are, it makes it hard not for us to hit the numbers. So it shouldn't be a surprise, because we've already been warned over and over again, and we've already seen the lowered expectations that many companies, or most, will probably beat earnings. Okay, but again, it's a rigged game when it comes to the earnings picture, because many companies intentionally underpromise and overdeliver to create the action for their stock. But you don't think we don't have a crisis brewing here? Again, I don't want you to get confused with the markets. Again, the markets and the economy have nothing to do with each other at the moment. Okay, and certainly it's not going to change our views of what we're going to do with our positions, because as we have said every week since the beginning of the year, and we will continue to say, we are long the market. Okay, we are not getting out. We are not changing until our algorithms change. And for those of you who participate, know that we've been long each and every week and will not change, because there is no reason to change. But the warning signs are very, very clear out there. There is a lot of problems and a lot of issues to deal with. And of course, it will start with, in my opinion, the, once again, over-leveraged banks who continue to lend out money to, not to the general public, not to the guys who really need the money, but to the peer-to-peer lenders in which they're buying notes from, to the to the higher rate lenders who first lend and then sell the loans to the banks and take their little piece off the top. And of course, then the banks will package those loans once again. Does this all sound familiar? Okay. Is this reminding you of any time in history? Because history does repeat itself, and those who fail to use history are what is it, doomed to repeat it? Again, do we really think that because Secretary Mnuchin says the banks are in great shape, or because that ridiculous stress test says that we're in great shape, do we really believe that the banks are in that great a shape? I find it hard to believe, with all the whining and crying that they're doing. But of course, they are bringing in record profits once again, even though we're expecting less. But again, do we not think that there is not a problem or an issue here? Okay, we're already seeing some of the issues in the jobs world. Of course, we keep hearing how many jobs are available, all right? But of course, there's not the right people to fill them. And then when there is, suddenly those jobs are no longer there. Now, again, I think that the economy itself has done well. I think we've had some improvement, but I do believe that there is a recession. And again, I will say this, I believe we're already starting to see the recession. Okay. Now, again, it doesn't mean it's going to, recessions just don't show up and one day we're in a recession. They are something that build from a long term. And this goes back to the ridiculous interest rate policy that we're running over. This goes back to these central banks around the world continuing to try to manipulate their currency and their interest rates instead of letting a free market system take control. So we continue to have the same issues that we always have at any time. Now, again, I'm not saying that anything's going to happen here negatively tomorrow. All right, again, and we'll be long the market. So, I want you to understand, but again, we've got a Federal Reserve that really should be ended. Okay. There is no need for the Fed. Okay. Because they're well off what the original plan of what the Federal Reserve was for. Of course, if you read The Creature from Jekyll Island, or if you understand what it was about, of course, it was a rigged game to begin with. Okay, and of course, we're now into obviously a lot more crazy things going on, and we've got a big push towards socialism. And when we look at the budget and the amount of money that goes to the entitlement programs, which is why we need capitalism in this country. Okay, again, you cannot get away from the capitalism system. It's something that allows anybody to bring up, and it allows the markets to move. It allows for the velocity of money instead of giving the power to the very few. In this case, we know who wants the power right now, and we won't get into a political debate today. But it is certainly interesting how when they don't even like some of their own candidates, that they end up throwing them underneath the bus with all of these things coming out. Isn't it just interesting that all of these bad things are coming out now about the savior, Joe Biden, okay, because they don't want him to run. They don't want somebody near the center, okay? Does it remind you of what happened to Kavanaugh when they were going to have his hearings, okay? So you got this continuation of all of a sudden, out of nowhere, the greatest person in the world, and again, not a big fan of Joe Biden, but all of a sudden, all of these bad things start to show up and we start to hear about him just because he may or may not announce that he wants to run for president. But of course, we know that he is not far enough left. He doesn't fit in with the haters and the anti-Semites and that group of people that are trying to gain control of the system. Okay, but in the meantime, okay, we've got a lot of issues that are going on. And of course, as I've said before, I believe the banks are over leveraged. I do not believe in these stress tests. But again, we will react to these markets. And of course, with the expected earnings to be not very good, And when they do beat, we will continue to have the rally. And why is that? Because right now, the whole plan is forcing every person who wants to get any yield on their money into the equity market, okay? Because certainly we know, okay, that the markets can demand a much higher interest rate than we're seeing right now. But of course, again, when you have this manipulation, and in this case, we now have our president trying to keep rates low, and of course the Fed that kowtowed and backed down for whatever reason. And again, it's hard to follow what they say or what they want to do, because the bottom line is that they don't know what the hell's going on, and they have no clue of what the real world is about. Okay, but I think that when you look at what's going on, I think you can start to see there are many, many issues developing. Okay, and again, this goes back to why we should have no Federal Reserve. And just on a side note, okay, of course, Herman Cain is one person that President Trump was trying to get, or may nominate. And actually, I do believe that he would be a good candidate, okay, not for political views, but because I think he does understand some of the economy. But again, at the end of the day, we should really just have the asset class of interest rates determine what the fair rate would be, simply by the supply and demand model, which is as simple as you can get. When there's a big demand for money, interest rates are going to go higher. Interest rates are going to go higher until the demand wanes, and then there's no longer demand, which means they'll have to come back lower. But they will find price discovery will help you find equilibrium of what the fair price is going to be. It's as simple as that, but of course, we don't get it because we have to have these games of manipulation to try to create artificial BS, which really has nothing to do with the true economy. And that is why we end up in these major big booms up, and we create the bubble, and then of course, the bubble pops. And you can go back long before 1980, but the biggest bubble builder started with Greenspan in 80, and of course has continued through. And when we thought we finally had a Fed chair that understood, okay, and wasn't just academia, we were wrong. In the meantime, this is Bubba's Bottom Line. Todd Bubba Horowitz, always great to be with you here, and we're going to stop out here for a break. In the meantime, we'll be back with more of Bubba's Bottom Line in about 2 minutes, and here we go with what's going on. And of course, just a couple of notes for you guys. We're doing a futures webinar this next Saturday on April the 20th. If you'd like to get a link to come and watch it, go to BubbaTrading.com. That link will be posted there for you. Or you can email me and I'll send it to you. It's free. You can come and watch it. And of course, for many of you who follow our futures portfolios, okay, we kind of run a managed futures program, but we don't do the managing. We give you the information and the trades and help you manage them, but we want you to manage it yourself. In the meantime, we are in the process of selling out, okay, our signals and our timing, and we have 2 weeks left to actually bring in any new subscribers who want to get this. So if you're interested in learning how to futures management and manage the futures portfolio, certainly email me at bubba@bubbatrading.com. I will send you a recording and our special deal, because we are working out again. This will be our last 2 weeks in which we will actually have control of those signals, because once we sell them, it's over. They're going to be part of somebody else's program. But we do have a deal. Part of the contract is that we are going to continue to be able to give them to our current subscribers. So if anybody wants to look into that, please email me at bubba@bubbatrading.com. And of course, don't forget about our high school investing program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. In the meantime, let's get back to Bubba's Bottom Line with me, Todd Bubba Horowitz. Welcome back to Bubba's Bottom Line. Todd Bubba Horowitz with you. And of course, Virginia won the national championship. Not a surprise. We predicted it here. But also something to think about. Masters, what a race. And of course, they have to move the timing way up early today because of the weather. But what a great competition. And I think there's probably about 15 guys who win. We're going to go ahead and give you two choices that we like, which is Tony Finau, okay, as one, and Dustin Johnson, who I think can come back from 5 shots back to potentially win this today. That would be what we'd be looking for. But in the meantime, what did we see last week in the markets? Gee, shocking. They were higher again, okay? Again, we say this almost every week, okay? As much as some of those out there, the internet trolls, those bitch and say that I called for the top of the market. We called for to sell rallies months ago, but since the beginning of the year, since the big meltdown on Christmas Eve, we've said each and every week right here that we are long, we are staying long, we're not selling, we are looking for higher. And at this point, as we've said, I think you're going to see more than likely new highs come to the overall equity markets. Again, we're within a couple of percentage points. You could see this happen, and you could get there in one day now. Now, what happens from there, we'll see. You know, remember, we have ridiculously light, miserable volume in the market. You've got volatility collapsing, which indicates and leads to a market that is probably going to trade higher. Okay, that again, dull markets trade higher. Why? Because money flows in every day from pension funds, mutual funds, IRAs, the whole deal. So new money comes in, and it's always on the buy side, and it needs sellers. So right now you have what I think we have called a number of times. You have the big money sitting it out, letting the retailers continue to buy and bring it up, so because they all have the fear of missing out. And of course, I think once we reach a certain pinnacle, I don't know what the number is, but at some point here, it will change. And when it changes, we'll be ready and we'll change. But until then, we're going to go ahead and participate and collect each and every week by being along the market. That is, again, really just, it is as simple as that. And of course, I think the amount of emotion you'll see that'll come into this market when it does change, I think you can take a look at gold for a very good look of what's happening. And of course, as you may or may not know, I do write for Kitco every day or almost every day and give my commentary on gold. And we were bullish from down at 1180, and we were bullish up to 1350. And once we came back from 1350, we now developed a range between 1280 and 1320. I think that range might be a little bit tighter now, which may be 1290 to 1310, but that is the neighborhood. And of course, on Wednesday, right before the Fed minutes came out, once again, our friends reported garbage. Okay, but as the minutes came out and gold was spiking up, I must have gotten 20 emails. Is it time to buy? Is it time to get back in? And I said very simply, we are short. We are staying short. Okay, if you're an investor in gold, you shouldn't be watching. If you're an investor in gold, you should stay pat, or stand pat, as they say, because again, you're not trying to time the market. Okay, if you invest in gold, then you're investing money that you don't need today. As a trader, we are short, and we will stay short until our algorithm says it's time to get long. In the meantime, what did you see on Thursday? You saw gold fall almost 20 bucks, coming all the way back down to that support level. So let's see how it trades out again. We will stay short the gold market until, from a trading standpoint, now remember, not investing, from a trading standpoint, and until that changes. Crude oil pushed up to that 64, fell back, closed back over a little bit over that 64. Now, we do think now that the overall top's turn again. We are going to step back into the crude oil market from the short side. And as we know, we got our lunch handed to us last time, but also the time before, we were able to ride it all the way down into the low 40s. And again, I'm not saying it's going to the 40s tomorrow, but I think we're going to start the trajectory going the other way. You've got many rigs being put back out. You've got problems with the petrodollar in Saudi Arabia. You've got a lot of shady deals going on here in the oil market. And of course, the one thing we would expect to see is most likely as prices stay higher until the actual official start of the summer driving season, so that big oil can certainly stick it up the ass of the average consumer once again and get those bigger prices at least through the big driving weekend of Memorial Day. But I think then you might start to see some of these prices start to fall. And of course, the grain markets were very, very, I guess would be, but they're not horrible. They're not in horrible shape. They actually recovered nicely from the big beat down they took on the USDA report. Again, we're big fans of grains. We're big buyers of grains. We're going to hold with them, looking for a potential breakout to a big market. Okay. Now, again, this is more of a risk reward trade. This is more of a mechanical trade because I am willing to hold based on where they are price wise right now. Because I see a potential downside of, let's say, for example, in corn, 10 to 15 cents. I see a potential upside of over $1. So at the end, I'm willing to take that risk and hold versus doing anything else. The meats continue to have a lot of crazy things going on, but they are working higher. But I did in my report on Thursday night, I showed a lot of charts, and I went back in some of the products 3 years. And then, of course, in meats, for example, they only go back about 7 or 8 months. And you can see that the patterns we talk about each and every day, feeder cattle continues in consolidation. Actually closing Friday dead in the middle between the high and the low of the initiation of this contract. Fat cattle, which is live cattle, continues to trek higher. Okay. And of course, not a surprise, it continues to work its way to the upside. All right. It's a very bullish chart. And of course, hogs, probably the greatest trading market right now of any market because it has close to limit moves up and down. Because of course, we've got the concern and the fear of the African swine flu, which again, we will say what we said on with RTTV is that it's already been pretty much priced in. Yes, you'll have a lot of volatility back and forth. And if it gets worse, you might see another leg at the upside. But we're bullish the hog market, but we will not be buyers until we see a pullback. We would rather be short from what we consider these high ridiculous levels. But as you look at the formations, which are backwardation and contango, okay, you can see that the action going forward is more bullish than it usually is at this time of year. And of course, the bond markets, the bonds have finally come down a little bit and are breaking. Now, again, we'll see how the action comes this week. But again, we're looking for spots to continue to short treasuries and buy U.S. dollars because, again, we think that the dollar has been tried to be compressed and tried to be pushed down by, again, central banks around the globe. And at the end of the day, okay, at the end of the day, certain markets will trade the way they're supposed to, no matter who tries to organize or change prices, okay? And I think that is something that we have to look at from a longer standpoint. And I think that's why the bonds will eventually collapse, okay, pushing interest rates higher much faster than the Fed will want to. But because the Fed won't keep up now, okay, I think you'll see a much bigger push once it happens, which will once again create the panic, which once again will show you that the Fed is really just is not needed in today's world. Now, I'm sure I'll get many arguments on that. I'm sure I'll get a lot of letters on that. But in the meantime, I don't care. I go back to 2008 and 9. They should have let the banks that were in trouble go bust and made the depositors good. Okay. So instead of printing $4 trillion so that they give out bonuses, they could have printed the $4 trillion to support the depositors that were going to lose money if those banks got into trouble. That would have been more of what I would be looking for. But so as we look and we talk about the potential of recession, again, there's a lot of things slowing down right here. So we're not predicting that it's the end of the world. We don't do gloom and doom on any of my podcasts or any of my shows because I don't believe in gloom and doom. What do I believe? I believe that the markets go up 8 to 9% year over year for 150 years. That is not going to change, in my opinion. Okay. But from a trading standpoint, I'm looking for a spot that I'd like to be short, but I'm still long, again, because I continue to tell you that the algorithms have us long. We're going to step out here for a break and come back with my commentary after the break. This is Bubba's Bottom Line. Todd Bubba Horowitz. We'll be right back with more. Hey, all. Listen, just a reminder, Saturday, April 20th, noon Eastern, I'm doing a futures webinar. If you'd like to join in, it's free. All you got to do is email me at bubba@bubbatrading.com or go to the website, bubbatrading.com. There'll be a link there for you. You can go put it up and register. And of course, our futures portfolios, our futures management just hit all-time new highs this week once again. You can check them out. I'll send you what it looks like, the track record since 2017, since 2 years ago now. You can see the equity curve. You can see it all. But in the meantime, we are selling out our selections there. We're selling out our algorithms, not the actual algorithms. We're going to sell out the picks. But we will be keeping the current subscribers we have, and anybody who wants to come in to our special deal within the next 2 weeks. So certainly if you want to check it out, email me at bub@bubbatrading.com. And of course, don't forget about our high school program, highschoolinvesting.com. Certainly we could use your help at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Let's get back to Bubba's Bottom Line and my commentary. Welcome back. This is Bubba's Bottom Line. I am Todd Bubba Horwitz, and of course, each and every week, I get to bitch the whole time, but I also get to give you my commentary. And of course, you know, with all the talk of nationalized healthcare and with all the talk of insurance and insurance companies and all of this BS, I think we're missing the point. And this ties into a lot of the things we do, which is why do insurance companies not have true free markets around? Why are insurance companies not able to cross over state lines and bid contracts and bid for people's business? And why is that we have so much of this garbage that goes on? And I think the biggest thing we look at is the prescription drug market. You know, I know somebody who was on a drug that was working perfectly, took care of their health. They were in jeopardy before, and they had to switch insurance companies, and the new insurance company will not cover the drug that they were taking that worked. They want them to take a different drug that may or may not work. Now, I ask you, okay, what kind of bull is that when we know that the pharmaceutical companies are murdering us on costs? Because again, you just leave this country, you can go buy the same drug off the counter for less than you can get it with your insurance company and their stupid copay, okay? But yet we continue to have, and this is not an isolated event. I need an MRI, all right? I have a titanium plate in my neck, and I need an MRI because it's getting old and I need to check it. In the meantime, the insurance company only will cover an X-ray. They will not cover an MRI, okay? So again, now I can go, fortunately, I know people, I can go pay cash for an MRI myself, okay, which I will do. But at the end of the day, why do I have insurance? Okay, so this is the problem with the whole insurance plan and what's going on, because again, it goes into many of the problems we have elsewhere. Is there's not true competition, there's not true free markets in this business, and that's where it needs to change. And that is one of the big issues we have throughout our country right now. Is there's too many fingers in too many pies, allowing too many companies to really rape the system versus actually providing the service and getting their fee for doing so. This is Bubba's Bottom Line. Todd Bubba Horwitz. As always, I thank you and appreciate being here. And again, we like for our two picks for today for the Masters, Tony Finau, and we like Dustin Johnson as a little bit of a long shot. We'll see you back here next week with Bubba's Bottom Line. In the meantime, we will be back for those of you who subscribe to Bubba's Daily Update tomorrow with more. Have a great weekend, everybody. Thanks so much. Enjoy the Masters. Enjoy it all. Enjoy your Sunday. We'll see you later.